Hey guys, it's Will. Thanks for joining me today. I believe a recession and stock market crash are coming soon, and I'll explain why. But the more important part of this conversation is how we can prepare for and then profit from a stock market crash if and when it comes. As a quick disclaimer, I'll be talking about the stock market, but these are only my opinions. They're informed opinions for sure, but still only my opinions. This is not investment advice. You need to make your own decisions about how to invest. I've been the chief financial officer of several software companies. I have an MBA from a top business school, and I'm a chartered financial analyst, one of the toughest investment credentials you can earn. I've also worked as a senior executive in early stage companies, as well as larger, fast-growing companies. The advice and ideas I offer today come from that background. As you listen to this conversation, please let me know in the comments if you agree or disagree with what I'm saying and why. We can all learn from each other. There's an expression that says a person can't see the forest for the trees, which of course means a person who is so caught up in the details of something that they miss the big picture. They can't see the bigger, much more important thing in the situation. In my opinion, investors today are being lulled into the idea that we're going to get a soft landing, that somehow the Federal Reserve Bank can sharply raise interest rates to combat inflation without causing a recession. As proof, many market watchers point to the unemployment rate, which is very low, and to the stock market, which is up from its October lows and looking like it's signaling perhaps a resumption of the bull market. While I normally wouldn't try to make a call on the direction that markets will go, in the current situation, I strongly believe the stock market probably won't go up much from here, and it could go down meaningfully. My personal investments are mostly in cash right now. I'm betting that investors who think the bottom is in can't see the forest for the trees, that the big picture, important signs are warning us that the economy is slowing and the market will likely go lower. But I'm not worried about a potential stock market crash. In fact, I'm excited. I've been a reluctant investor in recent years because the market got so expensive on the back of constant support from rock bottom interest rates and quantitative easing from the Federal Reserve, and in the wake of COVID-19, the massive fiscal stimulus from the federal government. Not only did the stock market get overpriced, but bonds were expensive due to record low interest rates, and housing entered a bubble more extreme than the one in the mid-2000s. So as an investor looking to buy reasonably priced assets, the pickings have been slim. I've been to this rodeo before, but last time in the 2008 recession, I wasn't prepared. I didn't see the forest for the trees. Why? Because at the time, in 2007 and 2008, most market watchers and strategists and the Federal Reserve Bank itself were telling us everything was okay. I, unfortunately, was an investor during the 2008 stock market crash. In fact, the floor completely fell out of the market exactly during a 10-day trip I took to Germany with my wife to celebrate my 40th birthday. We had the mispleasure of waking up each morning, about 6 hours later there at the New York time, and finding the markets down substantially day after day. It was stunning and a bit terrifying to watch. The market fell 27% during my 2-week trip. Listen to these statistics. In the year before September 2008, which was my birthday trip, the market slowly ground down 24% from its high. That's a lot. But then during my 2-week trip, it fell another 27%, and then it fell another 22% before hitting the final bottom. A lot of people were unprepared and lost their jobs and their life savings. Jumping forward to today's markets, as of right now, the S&P 500 is down about 15% from its 2021 highs, a little over a year ago, and the NASDAQ is down about 25%. While the future is unknowable, I could see them both going down maybe another 25% from here, maybe more, maybe less, but in my opinion, the direction from here is probably lower. Let me explain why, and then I'll talk about the most important thing, which is how I'm preparing for this and how you can too, why this is an opportunity, and what I'm doing to prepare so I can take advantage if and when it comes. So here's why I think the market is going down. First, the bond yield curve is very inverted, which is when short-term interest rates are higher than long-term interest rates. Normally, when the markets think the economy is healthy, it's the other way around. Historically, an inverted yield curve is a big warning sign that a recession is imminent. generally starting about 12 to 18 months from when the inversion starts, and it is almost always correct in its prediction of recession. The yield curve has been inverted for almost a year now. Second, the bond yield curve is inverted around the world, not just in the US. This warns of a global recession. Third, in the past, China has been a driver of global growth, but now the economic data coming out of China is very weak. We can't expect China to be the global savior at this time. Fourth, debt levels are high in the economy at a time when interest rates have suddenly skyrocketed. U.S. consumer debt is at a record level, credit card interest rates are at an all-time high, and market interest rates in general, due to the Fed's actions, have shot up significantly. At the same time, consumer savings, which had built up significantly during COVID, are on track soon to be mostly spent all the way back down. Consumers and companies are loaded up with debt and now facing suddenly much higher interest costs that they can't afford. Fifth, broad-based surveys of business activity across the economy have been showing contraction or stagnation. Sixth, the Fed is still tightening, raising interest rates even as the economy is rapidly slowing because inflation has remained higher than expected. The Fed is still pushing aggressively towards an economic slowdown, which is a stated goal of theirs. Seventh and last, the leading indicators warn that corporate earnings are about to turn negative, meaning earnings in future quarters will start being lower than in prior quarters. Companies will cut costs and workers to try to preserve profits. Unemployment will go up. A lot of companies will go bankrupt because they can't afford their debt. It's hard to picture the stock market going up much from where we are today when these indicators suggest a lot of pain will soon be hitting the economy. Ultimately, in my opinion, Wall Street forecasts that future earnings will go down and stock prices will go down accordingly. Okay, that sounds bad. So how can we prepare? Well, this is what I'm doing. First, cut expenses. One of my passions is flying. I got my pilot's license 3 years ago and bought a small plane in 2021, which I used to earn some additional ratings. I sold the plane a couple months ago, though. I hated to do it, but there's no way I want to be carrying that expense going into a recession. Do you have an extra car that you don't use much, or an RV, or a boat? Consider selling it. Not only will it relieve you of the expense of maintaining it, but you'll also avoid the decrease in value that will happen in a recession, and you can always buy another one in a couple years at hopefully lower prices. Put in the comments below how you might cut expenses. Together, we can give each other ideas of how to get through this. Second, by cutting expenses and selling unused assets, you are raising cash on hand. That's good practice going into an economic slowdown. I've gone further and moved my investments mostly into cash too, where money market rates are around 4.5%. It doesn't hurt anymore to be in cash when interest rates finally offer a good return. And third, protect your income. Most people work for someone else. If you do, you can lose your job if the company needs to cut expenses. And losing your only source of income during a recession, when it's much harder to find another job, is one of the most stressful situations life can throw at you. The best time to prepare for an emergency is before it happens. I'm working to protect my income by starting several side businesses that I own and control. You can do the same. That way, you'll be generating another source of income for your family, one you control. As a side benefit, this is hugely motivational. It gives you something to work on even if you lose your job, and it can possibly replace your current income. Think about it. Even if you want to keep doing your job, if you're generating additional income on the side, it can go towards retirement. It can help you pay off your mortgage. It can help put your kids through college or just pay for a vacation. And it reduces your stress because you know you are less reliant on your employer. Also, if you have kids, it sets a phenomenally good example for them to see their parents build a business. You can teach them how you did it. They can help with the business, and they'll be learning great life skills and a sense of confidence and can-do that they wouldn't otherwise know. Folks, while I advocate that others do this, I'm also doing it myself. And if I can do it, you can do it. I'm in the process of starting several businesses, 2 so far with more to come, and I'll share the results with you periodically. Here's what I've started and am planning. First, YouTube. I've started this YouTube channel to build a community of people who are interested in personal finance and entrepreneurship, people who crave a more fulfilling life with better financial security. Hopefully, we can be a source of ideas, inspiration, and support for each other. Second, SmugMug and Etsy. One of my longtime passions has been landscape photography. My goal now is simply to make some side income off of a nice portfolio of images that I've built up over the years. I put together a photography website on SmugMug to sell prints of my photographs, which I'll promote through Instagram and directly to home decorators and other potential customers. And I'm building a store on Etsy to sell prints to their huge audience. I'll be thrilled if I sell $5,000 to $10,000 per year, passively, using these tools, and while I continue to enjoy my hobby by making new images. Third, a huge benefit of starting businesses is you learn skills that can help make you money. While I'm new to selling on Etsy, I'm intrigued about the possibility of creating other shops on their platform, possibly to sell digital downloads of various kinds or other products. Fourth, podcasting. I'm considering starting a podcast, but I'll save the reveal on what the topic will be for another occasion. I launched the podcast a number of years ago, but stopped at the time because a great career opportunity came up that took up all my time. Now, though, I think a podcast would fit in very well with what I'm doing. Before I start, though, I need to finish my current projects. My expectation is not that any one of these businesses will replace a full-time income. My goal is that cumulatively they will. My focus is on income sources that are passive in nature, meaning I can build a product once and then continue to earn money on it even while I'm working on other things. The important thing is that I'm doing all of this before a recession hits, so that if and when it comes, I'll have a head start. I'll have income coming in that I can invest when asset prices are finally at a much more attractive price. And in the meantime, I have most of my investments in cash, earning 4.5%, and I have zero stress about whether or not the market is going to crash. And with no stress, I sleep better and can focus on creating and building my portfolio of small businesses. So here's the formula, folks. This is how I'm preparing to get rich from the coming stock market crash. First, reduce expenses. Second, sell unneeded assets to raise cash. Third, move investments out of equities and into cash. And fourth, create extra sources of income. These steps together give me cash on hand so I can then invest at better prices if and when asset prices come down, when the stock market crashes. And even if it doesn't, I will have built up a good income stream that I control. That alone will make it all worthwhile. I invite you to join me. Please leave your ideas for businesses to start in the comments below. We can all learn from each other. See you next time.